Hello everyone, I am Janak Shrestha. I would like to welcome you all in Audit and Assurance paper F8 SCCA. So let's start the syllabus area. What are the syllabus area and what are in this syllabus area? First area or syllabus A is Audit Framework and Regulations. There are 4 chapters: Introduction to Audit, Rules and Regulation, Corporate Governance, Ethics and Acceptance. Syllabus B, Planning and Risk Assessment, 2 chapters, Risks and Planning. Syllabus C, 2 chapters, Systems and Control, Internal Audit. Syllabus D, Audit Assurance, 2 chapters, Evidence Procedures. Syllabus E, Review and Reporting, 2 chapters, Completions and Review and Reporting. Let's go to exam patterns. Section A, Computer Mark, 3 multiple choice questions with 5 questions, each with 2 marks, total 30 marks. Section B, Human Marking, 1 case study with 30 marks, 2 case study with each 20 marks. In total 100 marks. So let's start chapter 1, Introduction to Assurance. So agency theory. The shareholders delegate the directions of the company to directors who act as an primary agent for shareholders and company. In order to obtain assurance that financial statements do show true and fair view, shareholder also appoint auditor as secondary agent. The auditor then audit financial statement by going through financial statement line by line using the audit process. The evidence gathered these tests then give auditor picture that whether financial statements show true and fair view. The auditor then delivers his opinion to shareholder in the form of audit report, thereby delivers assurance. This is agency theory. So in agency theory, you have to know there are 3 persons. 1, principal; 2nd, primary agent; 3rd, secondary agent. So I think you know all of them. So this agency theory also tells us that why auditor is necessary or needed in the company. So I hope you understand agency theory. So let's go to next subtopic, assurance engagement. It is one in which practitioner express a conclusion designed to enhance the degree of confidence of intended users about outcome of evaluations or measurement of subject matter against criteria. The purpose of all assurance engagement is to provide assurance to the intended users. So simple meaning of assurance means confidence. So there are 5 elements of assurance engagement, or we can call it element of assurance. First, 3-party relationship. First party, practitioner or auditor, the person responsible for determining the nature, timing, extent of procedure and must pursue doubts and queries. Second parties, responsible party, directors, the person responsible for the informations and assertions. Third party, intended users, shareholders or board members, the person for whom practitioner prepare assurance report. Responsible party can be one of the intended user depending upon the situations. Second element, appropriate subject matter. Subject matter must be identifiable and capable of consistent evaluation or measurement against identified criteria such that it can be subject to procedure for gathering Sufficient appropriate evidence. So subject matter may be financial performance, non-financial performance, physical characteristics, system and process, behavior, etc. Third element, suitable criteria. These are the benchmark used to evaluate or measure the subject matter. Without the framework of the reference provided by the suitable criteria, any conclusion is open to individual interpretation and misunderstanding. It must be available to intended users. Suitable criteria may be IAS, IFRS, internal control framework, applicable laws, regulations, and controls. Fourth element, sufficient appropriate evidence. These are proof of area whether subject matter matches with suitable criteria or not, in order to give required level of assurance. So, what is sufficiency? Quantity of evidence. What is appropriateness? Quality of evidence, relevance, and reliability. Fifth element, written assurance report. A written report containing a conclusion. Assurance report is prepared by auditor, providing opinion on whether financial statement is true and fair. So there is an example of 5 elements of assurance engagement. So house survey for buying. It means buying a new house. So what are the elements? First, practitioner. For buying house, the practitioner will be surveyor. Responsible party will be current owner. Intended user will be buyer of the house, who will buy the house. Subject matter, house. Criteria, acceptable levels, laws and regulations. Conclusion, surveyor reports. So, talking about the assurance engagement, the element of the assurance is important for the exam, which may carry 5 marks. So I request you all to go through these 5 elements in detail and understand it. So let's go to next subtopic, level of assurance. There are 2 levels of assurance, reasonable assurance and limited assurance. Let's go to reasonable assurance. There is high level of confidence. It requires a lot of works. It results in positively worded opinion, which is, in our opinion, the financial statement give true and fair view. Example of reasonable assurance is external audit. Now let's talk about limited assurance. It is moderate or low level of confidence. It only performs inquiry and analytical procedure. It results in negatively worded opinion, which is, nothing has come to our intention that suggests financial statement does show true and fair view. The example of limited assurance is outside of external audit, which are review and forecast. We never give absolute assurance because the financial statement content estimate which auditor cannot prove. The audit is performed on sample basis. It won't take too long, and it would take too long and cost too much to test everything. So test on sample basis. Auditor relies on client's internal control, which may be ineffective. Audit evidence is persuasive, not conclusive, that is, does not guarantee. Any evidence obtained from client may be biased. The confidence inspired by a reasonable assurance report is designed to be greater than inspired by the limited assurance report. Therefore, there are more regulations, standards governing a reasonable assurance assignment. The procedures carried out in reasonable assignment will be more thorough. The evidence gathered will need to be of higher quality. The auditor don't express unqualified conclusion for either type of assurance. Limitation on scope of auditor's work. Assertions are not fairly stated and subject matter information is materially misstated. So, talking about the level of assurance, this is also one of the important subtopic for the exam. It may be asked in multiple choice questions regarding reasonable assurance, limited assurance, or why we don't give absolute assurance, or why reasonable assurance confidence is greater than limited assurance report, and auditor does not express unqualified opinion in either of the two situations. So it may be mostly asked in multiple choice questions, so you have to know the knowledge of this. So let's go to next subtopic, different types of engagement. So we have already read that the purpose of all the engagement is to provide assurance to the intended users. Let's start. First, audit of financial statement. Review set of financial statement to see if they give true and fair view, if they comply with the standards. Second, review of financial statement, similar to audit but involves much less work to be done. Third, examination of forecast. So how will company do in the future? Encourage finance provider to invest, as provider will want forecast to be independently reviewed to show if they have been prepared on reasonable basis or not. Fourth, review of internal control. Separate from audit, client may ask auditor to detailed review of their internal control system to determine if they are acceptable or not, and to make recommendation on how to improve it. So you just need to know that different types of engagement and what does this means. Let's go to another subtopic, external audit. External audit is an independent examination of the financial statement prepared by the director to provide assurance to the shareholders whether financial statement give true and fair view. So audit are governed by International Standard of Auditing, ISA. Let's go in detail. First, this standard tells us what auditor need to achieve when performing an audit. Auditor job is to review a set of financial statement to see if they have got error in them. Auditor don't look for all the errors, just those auditor deemed to be material, and auditor will learn what materials means. Once auditor have done review, auditor must give opinion as to whether this financial statement comply with rules on financial reporting, which is IFRS. All assurance engagement, auditor must give opinion in writing in the form of an official auditor reports. So the objective of an auditor are to obtain reasonable assurance about whether financial statement as a whole are free from material misstatement, whether due to fraud or error. Express an opinion on whether financial statement are prepared in material respect in accordance with applicable financial reporting framework. Report on financial statement and communicate as required by ISAs in accordance with the auditor's finding. Let's look at need for external audit. Shareholders provide the finance for the company and may or may not be involved in the day-to-day running of the company. Director manages the company on the behalf of the shareholder in order to achieve the objective of that company, normally the maximization of the shareholders' wealth. The director must prepare financial statement to provide information on performance and financial performance to the shareholders. The director have various incentives to manipulate the financial statement and show a different level of performance. An external audit provides an independent verifications of the financial statement to ensure they give true and fair view. So this external audit is not much more important, but you have to know what is external audit, what are the objectives of the auditors, need for external audit. So you don't need to know in depth, but you have to know in brief that what are these, where are these required, what are its needs. Let's move to next subtopic, expectation gap. This is gap between what public thinks and actually auditor does. This is a misconception about the role of auditor, so which are referred to as exception gap. Example of the exception gap: a belief that auditor tests all the transactions and balances. Auditor tests on sample basis. A belief that auditor will dictate all frauds. Auditors are required to provide reasonable assurance that financial statements are free from material misstatement which may be caused by fraud. A belief that auditors are responsible for preparing financial statement. This is the responsibility of management. A belief that an unmodified auditor opinion guarantees the company is a going concern. So these are the misconception of the public on auditors. So you have to know this in brief. So it is not much more examinable in the exam questions. So you have to know what are the exception gap, these 4 points. Let's move to next subtopic, review engagement. A review engagement is an example of limited assurance engagement, as we have told when we have read in limited assurance, level of assurance. A company which is not legally required to have an audit may choose to have a review of their financial statement instead, which we have also indicated in limited assurance. The procedure will mainly focus on analytical procedure and inquiry of management. This is also covered in limited assurance. A lower level of the assurance is given than an audit, but it is less costly and less destructive. This is also covered in limited assurance. So another next topic, benefit of audit. There is a mnemonic which will be easy to remind you these points. Hired. So let's start. First, higher quality information is provided, as auditor will have given advice on presentation as well as findings of any material errors. Independent review act as second pair of the eyes, and director may be pleased that someone is looking over their work. Reduction of risks, that is, all of those reasons director could have been biased when preparing the financial statement are reduced if they know that someone else will be checking their work. Enhance the credibility of the financial statement. Example, for tax authorities or the lenders. Most of the users of the financial statement understand potential for the management basis and more likely to believe the accounts knowing they were independently valued. Deficiencies in the internal control system may be highlighted, as the auditor may find issues within system and can report to the management on how to improve it. Let's go to limitations of the audit with the mnemonic fired. Financial statement include subjective estimates and other judgmental matters that auditor cannot prove to be wrong or right. Example, depreciation, allowances for receivables and inventory accruals. Internal controls within business are often relied on as a part of audit. However, no internal control is perfect, as internal control may have own inherent limitation, so auditor may over rely on it. Representation from the management and other client generated evidence, auditor often have to use this source of evidence, but as they come from management, they may be subject to bias or inaccurateness. Evidence is often perceptive, not conclusive, as evidence auditor gathers tends to suggest that numbers auditors are auditing is correct, but cannot verify, often prove it. Auditor do not test all the transactions and balances, as it may take too long and cost too much, so there is always chance that auditor will miss an error because auditor test on sample basis. So we have come to conclusion of chapter 1. So these limitations of audit and benefit of the audit is also one of the most important subtopic for the exam. it may carry 5 marks, and it may asked in questions, so you have to be careful on this two subtopic also. So let's recall from the first that what we have read. So first we have read in Introduction to Assurance Agency Theory, then assurance engagement, where there was 5 elements of assurance engagement: practice, three-party relationship, appropriate subject matter, suitable criteria, sufficient appropriate evidence, written assurance report. Then after we look at level of assurance, then we look at different types of engagements, then external audit, then after acceptation gap, then after review engagement, which was example of limited assurance. Then we look at benefit of the audit with mnemonic hired and limitation of audit with mnemonic fired, and we came to finish chapter 1. So if you have any queries, you can comment your questions, and I will reply your questions. So this much for today. I hope it was a benefit for you, and hope to see you further in next video. Take care, have a nice day, bye bye.